Welcome back, everyone, to another Tres Amigos of the TA Report with your boy Bags, GP, and Nick.
Welcome back, everyone. Should be an interesting discussion today.
So, guys, I'm going to share the live link with everyone. But we were just chatting briefly about how, everybody's bearish, but it seems to be maybe a little indecisive on what we're seeing. And I've got the ES chart up there. If you guys kind of want to just say what you were thinking only a moment ago.
We were talking about hold on. Are you sharing a screen right now?
I should be. Am I not? It says I'm sharing. I see it on the YouTube. I see you.
Oh, okay. On Zoom I only see, okay, I'm seeing YouTube. Yeah, so even on the ES, I can see it on the YouTube link. We were talking about the tight weekly closing action. You know, if you look at a SPY, or I guess even the ES, the weekly, you know, the last 3 weeks we've closed fairly tight, and it's sitting at, you know, support, that 420 kind of support area. We could be holding tight, maybe chop sideways. I am still leaning to the one more leg down, but a leg down, chop sideways, either way, it's kind of tough action right now.
Yeah, so like I think where this hat is a joke, by the way. I'm not expecting limit down. I'm just it's just for prop sake. It's one I had out when I was doing this in 2020. There's a lot of mixed signals ultimately, right? But everyone, including ourselves, are talking about the indices, but the damage that's happening in individual stocks is bananas, right? Like outside of like the SPY's barely off its highs. If you're looking at it, it's like acting stronger than the Qs and the small caps. The Dow, same thing. Actually, I think it's one of the stronger ones. And that makes sense. Dow has some of the older kind of oil and energy stocks and dividend paying stocks, and the same thing with the SPY has a lot more economy exposure, so energy, oil, all that stuff. So those are acting better, and tech is selling off. And I'm not sure why necessarily tech is leading the charge down, but every time we gap down, it's always the NQs, right? The NQs are down 2.5%, 3%, and everything else is kind of down like 0.5%. And there's this innate pressure that's sitting under the tech conversation. And I think what I keep getting reminded of is rates have come down. If you look at the curve of the TNX, the 10-year rate, it's down. Yet we're still selling, right? And their inflation is high, but nowhere close to the levels we've had historically, right? Like, and that could get to where we're gonna eventually get to. But what I find is that we've had some really crazy price action, and we're still in a quantitative easing environment, and we're still at the Fed again this week had the opportunity. Jay Powell was on, huh?
The fucking Fed.
Yeah, but once again, they had the opportunity to double down on, we're gonna raise rates 50 basis points, 100 basis points, whatever. Like, you know, Bullard said, I'm going to raise rates in your dreams, right? Like, I'm going to make your dreams a nightmare, and whatever he was saying hawkish wise. Another opportunity this week to kind of cement that conversation. And yet they were still like, we're waiting for data. We're going to see how things look, you know, like, so they're already, from as strong as they were in November, they're already kind of taking a few steps back. So it's something to keep on your watch and stuff like that. there's a lot of mixed action, so less is always more, as we've talked about. But myself personally, I'm buying companies that I'd like to be long 6 months from now, 12 months from now. Can they go slightly lower, maybe a lot more lower? Yeah, potentially. But I'm happy with where they are, and I have cash to deploy to add more later. So that's kind of where I'm sitting, like, overall.
Yeah, I mean, we talked earlier this past week, right, when we did the sort of midweek live, that you should be scaling in, right? I mean, there might be another leg down. They might want
Long-term
to hold
investors
it
we're
right
talking.
here, but yeah, for someone who's long term, like, this is a pretty good buying opportunity, we feel like. And I'm with you, GP. I mean, I didn't put any money to work last week, because I have over the course of the past month. And so I just didn't feel I had to jump in with anything new. But if I hadn't done it previously, I would be doing it now, right? Like, there's just companies that I want to be involved in, and we can talk about, how mega cap might finally be taking a leg down, or barely treading water. There's a lot of negative news or headlines out about Apple last week and how the chart looks like it wants lower. The same for Microsoft, and they're two of the biggest pieces, right, of the entire of the SPY, of the S&P and the Qs. So if those are going down, it's going to be hard for the SPY and the QQQ to tread water unless they really get a lot of buying underneath those two companies, right? So
And a
we're
lot
still,
and a lot of the companies underneath are like, yes, you like, if you legged into commodities and oil and gold back at the end of 2020 when it was the right time, you're doing well now, right? But if
right.
you're trying to leg into these extended names now, your risk to reward ratio is inherently smaller. Yes, they can go up. They've been pushing. Momentum has now taken over, and you're getting to some crazy extended moves. Can they continue to extend? Absolutely. Like, we were talking about this earlier before we started the session, is like, out of like a consolidation pattern, Tesla back early in 2021, I mean, late in 2021, took out the 900 level and just went bananas. It went straight to 1300 in, I think, 3 weeks. And typically, if you're looking for like a consolidation, you kind of see like a handle form or like a sideways action at that prior all-time high resistance, while trap buyers are getting out and trap buyers are getting out and new buyers are coming in, and it's consolidating, and it just blew right through 900. It went straight to not 1300, and you've seen what it done
Yep.
afterwards, right? And so oil and gold are both kind of in these in this momentum driven, like, the calls are coming in heavy, the puts selling is coming in heavy, so the options market is continuing to drive this potentially higher, and they're not buying, they're distributing up here, right? Like, so you can get a 20-30% move and you can catch it, right? Great for you, awesome. Do I think it goes exponential from here where you start getting 100% moves? It's possible. Anything is crazy. Now it's like World War 52 instead of just 3 or whatever it is. We can go bananas, but historically, where we are in these names, these sectors, your risk is to the upside, not to the downside, right? So like, if Apple and Microsoft die, along with some of the ones that have been slowly have been holding up the S&P, like the smaller names, like
Yep.
the energy names, then you see a bigger swoon.
Well, and speaking of the lesser names, I mean, I want to look at the IWM for a second, and that's really not held up great either, right? I mean, with the destruction of what's happened in banks over the last couple of weeks, there's a lot of banks in the IWM, and it just looks like, I mean, I hate to bring it up and I hate to say it, but GP, you know what this is, a possible bear flag, right? and
rounding pattern, whatever you want to call it. I hear you.
rounding. So I think the smaller names aren't a place of safety for you unless you've been long, like you mentioned, those miners, which we know Nick has been playing, or some of the energy names. If you got long those anytime over the last 9 months or so, your account's pretty good right now. You probably don't have as much fear as the people like myself who are heavy semiconductors, heavy mega cap tech. So it's definitely it's an interesting time we live in.
So this is, if you're looking at IWM, if you expand to the daily here, right? Like I see the bear flag that you're talking about, except for that swoon last Thursday that got bought up like animals, right? If you go back to like 2020 on the daily view, it's a similar structure, right? Broke higher, broke lower, broke higher, broke lower, and then eventually kind of went. You see where it kind of swooned down there a couple of times. Like on every one of those swoons, everyone was calling for the end of the rally, right? Like if you remember 2020, it was game over, game was over, game was over, and yet we ground all the way back to all-time highs. And I know the environments are different. There's a war. I get all that stuff. I think what you're seeing on price action is that it's choppy, right? And it had every opportunity to break January 24th lows, yet we did not. Right? We gapped down. We did not. They bought it up again. Same thing in tech. So maybe it's shorts covering, maybe it's buying with like a lot of the kind of historical indicators that I'm not a huge fan of, but you take it out with like a grain of salt, like the DIX and some of the consumer sentiment and stuff like that. Like things are coming in and people are buying. Yes, we can go lower and everyone can be wrong, but there's general support coming in from the market. So I like to deploy money in these situations. And if I'm wrong, the downside isn't terrible for me here because I'm not deploying at Roku 490, but Roku 120 is a much better option. So I may still lose like 10 or 20%, but I'm not risking a ton here. So like push for me is happening. It's what it is, right? So, and you got to do your own risk tolerance and figure out what's right for you. But I like the opportunities here. These companies are still making lots of money. Maybe they're not growing as much, but they're still making lots of money, profitable as well. So stuff to keep in mind.
I think since this March 24th or 23rd low, right? Like every time the market has come down, I mean, every single time it's like, okay, we're going to go revisit those lows. Okay, we're going to go revisit those lows, right? And it's just the fear has been palpable. And now the difference is, the dip buyers aren't being rewarded like they have been. And I think we might, I hate the statistics of all this money on the sideline. You guys know how I feel about that. Like I feel like money on the sideline stays on the sideline because it's either scared money or it's people who really never plan to invest. So I really hate the sideline money argument because if you're waiting for it to go further, then it can always go further and you're always waiting to deploy that capital. But at the same time, like I think some of the dip buying is getting exhausted over the past, I don't know what, this is the IWM, but basically since Thanksgiving, I mean, everybody who's been active in the market seems to have been putting money to work. Now they may have pulled some out on some of these dips, but at some point you're tired of guessing wrong, right? And I think Nick really implements this well when he says he wants to see a trend. And right now the trend is not buy the dip yet, or it hasn't been.
I think it kind of bodes well for a spike lower in terms of how bearish everyone is. I mean, with so many names just absolutely clobbered, we're going to be coming into like some really, really heavy support if we do break lower. And I think, like, you know, take the chart of the IWM, you know, you can just draw, kind of make a range from like 187 up to 210-ish, 209. Like, if you, I mean, look at the weekly, we've got all that support down between 165 and 175. You've got that gap higher that, what date is that? November, beginning of November, we've got that gap. Like, we could test that, we could test the gap there and not even fill that gap. Like, that would be a very bullish sign or signal right there. That area,
Yep.
this area that we're kind of talking about, this 160 to 170 on the IWM, it's an area of support. It was previous resistance, you know, leading up until the 2020 breakout. That's also the 50%, right around the 50% retracement from the COVID lows up through what was that? The early November highs when the IWM basically false broke out. So we've got a lot of confluence in that, you know, let's just say 165, 175 zone. Again, like we were kind of talking about earlier, I'm still in this camp that, like, we're going to break lower to ultimately break higher. I just, again, like, with how much individual names have been clobbered, I just don't see, I mean, how much more selling can they do?
Well, the individual names can actually start to show relative strength versus names like Apple. And so Microsoft's had its weakness, but Apple's been pretty strong, relatively speaking. And, you know, people love to talk about, you know, PEs and valuations every time the market has its corrections and dips and stuff like that. And those same people disappear when the markets go back up. And so everything under the sun in this market has been destroyed except for Apple, right? And Apple's still sitting, I think, at a 27 PE or something like that, which trades richer to the SPY, and it continues to hold. Yes, it broke the weekly 20 EMEA SMA this week, finally had a close above it, so you could see it potentially accelerate below. But as I was talking about on Friday, it doesn't necessarily mean that. It goes sideways for a few weeks right around that 20 week and then pushes back up. So that is something to watch here if like something like Apple does start breaking down, right? And what I find is, like, if you're looking at the SPY, we have not gone anywhere since June of 2021. We're sitting right at the breakout kind of area. We've retested it like a bunch of times, and typically when we retest something that many times, it ends up breaking. But it could just be consolidation as well. We did this in 2015, 2016. We retested that, I think, what was it, like SPY 160 level, like half a dozen times over like 2 years.
I'm an old head, so I have a very high evaluation on Public Enemy. Chuck D is one of the greatest lyricists of a generation. But anyway, it's a different topic. We had 3 quotes before we started this from us all. I took notes in our pre-production meeting here. GP said, "Hell in a handbasket."
Yeah. Would you like to? I can do a no comment on that. But I don't know, man. Everything I read, the bearish posts out there, for as long as I've been doing this, every time I read this bearish sentiment, it's usually closer to the bottom than it is the top. And maybe this time is different. Maybe everyone is wrong, and it's possible, 100% possible. They've been doing this since they've been closing puts in the money and calls out of the money for months now. So they've been right for quite some time. So they can continue to be right. What I found was the SPY had a bearish candle, but at the kind of a bullish candle as well. If you can pull that up, Bags, on the weekly. Right, like you have this doji candle. We had an opportunity to break January 24th lows. We have war happening. Russia is going bananas on all this stuff, and we broke it. We couldn't close it below it, right? Even with this doji candle here, it was a close below prior week's close, but it was still a close above this week's open. So like this is why everyone's kind of in this battle of, well, we're going up. No, we're going down. We're going up. No, we're in a chop. We're it's a bearish candle, but it's also kind of bullish because it did still close above where the week started. So now you need to see confirmation to the downside or to the upside, and that's what I'll be paying attention to. And you can see, even if you're going, I think I shared a chart on Friday or Saturday for the Qs, right, or the comp or whatever. You're sitting at like historically oversold conditions based on standard deviations, right? So I'm in the camp that we're gonna chop quite a bit more here, and then we start to push up maybe after March OPEX. We'll see.
Bags's quote was, "Selling is over when sellers are finally exhausted."
That's deep, man.
Color me in duh. And Nick, you had, and I quote, nothing.
No, I said I'm in the camp of breaking lower to break higher. I mean, I see like looking at the the expensive leaders, like Amazon, Google, Booking, AutoZone, Chipotle, let's say Melly, Tesla.
Hang on, I heard you ringing Amazon's bell. Let's look at that piece of shit.
I mean, they all just look like. Can we just get like a capitulation, like a puke lower? I guess Shopify is getting absolutely. It's down over 50%, but
Shop's getting fooked in the fook.
So Nick, I have a question, right? You said break lower to break higher.
Yep.
How many times in your book would that need to happen? Because we've now done it 5 times, 6 times since the beginning of the year. We've broken lower, and then we broke, like, if you're looking at like from a daily perspective versus weekly, right?
I'm looking at a weekly chart, and from the way that I look at the chart, I only see 2 waves down currently, and I'd like to see 1 more wave down.
Okay.
You have the puke off the. I mean, it depends on. You want me to share my chart, Bags?
Yeah, sure, go for it.
I think you might have to clarify the index you're referring to, because I think the Qs might have already had the 3rd puke and the SPY hasn't.
Can't tell if I'm sure.
Because it topped out. SPY's topped out in January. Qs topped out in November.
I would call that a leg.
Okay.
And then I would call that a leg. It makes sense to me that we bounced from here, because if I just label this out A, B, C, and D, typically when these ABC patterns complete, we typically see price pause or reverse from here. So again, it kind of made sense that we bounce from here. There's not enough out there. I could get bullish on a descending wedge pattern, but if I don't see the individual names to support that wedge completing or breaking to the upside, I'm not gonna feel confident playing it. Like if I'm running my MarketSmith scans and I'm not really seeing a whole lot of names, I'm like right now is the time to be putting together your list. Like you want to be, for me, I want to have my RS lists. I want to start putting together lists that of the stocks that are holding and setting up. I have my list of like my leaders, the most expensive stocks, and then just kind of my general list. You know, especially, and again, you know, talking to you guys in terms of like long-term investing, trying to leg into these names, like I'm trying to use bearish patterns to buy and to leg into areas of support. So like, let's say I know I have a list of like, let's just say I want to be long. Let's say I already kind of know what I think that I want to be in over the course. Like I have my list put together. Like let's just say it's Tesla, Nvidia, I don't know, like the EDR. I'm trying to think of something else like PI, PSTG, AMD, Roblox or something, right?
Yeah.
I'm gonna have them on my screens, and I want to start legging into those on the long side when I think that this pattern is completing. So if they're in an area or in a place where they're technically set up to buy, and let's say the Qs are completing this ABCD pattern, that's when I'd be looking to kind of start legging in. But the fact that nothing was really set up or is set up doesn't give me the confidence to do that. And that's why I'm thinking we get kind of one more leg down. Looking at, like, let's just say Tesla, for instance, we're back inside this range right here, this 550 to 890. That means this is like on a much larger time frame. This is more or less a failure, a breakout failure, because we broke out of this range. We came back, we tested the high of the range to bounce, and now we're back in it. It's very likely that price continues to test the low end of this range. So like when I'm looking at the Qs or the SPYs and I'm thinking like we get one more leg lower, okay, so let's say we do get one more leg lower, you know, even talk about MBG, talking about we might even overshoot, the possibility of an overshoot. So like we get this one more leg lower, symmetrically, the leg lower would be, you know, the same length as that. We extend lower, and that kind of puts us into that 300 area. So if the Qs roll over and we're sitting around 300, or let's just say 280, 290, where do you think that puts Tesla, Amazon, Google? I'm thinking if we get that 300 test in the Qs, that puts Tesla, let's just say between 550 and 600. I think that puts Google kind of down towards this measured move, which would be around 22 to 2300. Amazon, same thing. I'm in the camp that we're going to break lower to break higher, being that I think the levels that we're going to be testing when we roll lower are very heavy. Like it's a heavy support area. Like looking at the Qs we have, and this is a nice range. We've got pretty decent support, more support here if it wants to overshoot. If you pull back up the IWM, kind of same thing. We've got resistance here, 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 even in here. 50% retracement from the 2020 lows to the highs up here, kind of sits in that 170 area. So again, like we see some of these big leaders start to roll. Where does that put the indexes, and then vice versa? If the indexes start to roll, where does that put a lot of these bigger leaders?
So a question we got on StockTwits from Wiggly Ick, and this goes along with what you're saying, Nick, but a little bit different. With a draft down, how concerned that the support will turn into mass profit taking, right? And I hear what you're saying on a leg lower to bounce higher eventually. He's looking at it from the perspective of how do we feel about if that leg lower is lower, then we're just going to have continued selling of people
Yeah.
getting out of positions.
So that's my
Again,
camp, right? That's
you
why
think-
I want this to hold, which is because if we break down here, this is not stopping, right? Like
No.
that's just my personal opinion. Like there's no break lower to go higher. It's a break lower to go lower. And that's just where I stand personally, because so like on a just an overall like everyone's portfolios, people's wealth conversation, I want this to hold here, because I personally believe that if we do break this down, this is
We're
a
gonna continue.
move that eventually gets back to 2020 like lows or
Lows.
somewhere around there, right? So that is what concerns me, is like I think another break lower here is not a buying opportunity. That's my personal opinion.
Say that again. You said the leg lower is not a buying opportunity.
That I don't think it is, right? Like so
you're
that's my
are
personal
you,
opinion.
are you then thinking? Let's see, back to the cues. You still thinking then? Just
So
basically playing
I'll
this
talk through your
range?
chart on how I see it personally, right? And how I've kind of seen it over the years, is that you had the November there, that wick up that failed, right? The November 22nd week or whatever. That failed, and it broke down immediately. It went from 408 to 378 in 5 or 6 trading days, right? Like it was a pretty, and that was right when JPAL came out and said, we're going to ramp up our tapering. We are going to raise rates forever and ever and ever. Like it was bearish, right? So that was your first like lower. And we've had consistently like lower since then. And the January 24th low was like your capitulation move. And then, so you'll see that the volume spiked there, right? On January 24th week. And every subsequent week after that, we tried to break lower, but on lower volume, as you can see on that. So to me, it's waning momentum to the downside.
Mm-hmm.
So this is how I see it, right? Like you had the big momentum shift and an acceleration that capitulated on January 24th week. You had another kind of retest back to that January 24th low that got bought up, but you can see that the volume is waning, right? Like if you're looking at it on a daily basis versus weekly. So I think that because we went green last Thursday off the impending war and all that other stuff, I don't want it to break lower here, because if I think it breaks lower here, I'm personally in the camp that we're going to go back to test potentially that 238 level on the Qs, right? And that's the 2020 COVID highs, came back and broke out. It didn't really consolidate there, so I can see it coming back and coming back there, because to me, there's not a lot of consolidation in this pattern here. So if we break this kind of head and shoulders rounding top, that the move is much lower.
All right.
Because there's not a lot of basing here, right? Like Nick, like what we like to see is when things break down, it goes back and back test base. Where do you see a base in this chart?
I mean, there's really not much. We just have these kind of these ranges here, because it's all it's been doing is melting higher. That's
but this is the closest thing we have to a base, right? That's what I was saying.
Yeah.
Since June of last year, we have on the SPYs, Qs as well, but on the SPYs, that 426 level has been tested 6 or 7 times on a weekly basis and whipped up every single time. So you have this base that's forming here. If we don't hold this base, I think the move is much, much lower. That's just personally my opinion, which is why I don't want it to go lower. But hey, if the market goes lower, it goes lower, right? It's just what it is.
Yeah. Just kind
But my whole thing is there's not a lot of base here, Nick. And
no.
if we break down, there's not much to save this.
I mean, these would be the two areas that I'd be looking at. I mean, I'd be in your camp as well. If we roll over and this 300 doesn't hold, I mean, I'm gonna take it a step at a time. I don't want to get too far ahead
Oh
of
yeah,
myself.
same
but,
boat, right?
like,
Like, step at a time. I would like to
bounce.
see anything
Yeah.
hold. It would be great, but like I'm just in my thought process is that this is the only kind of basing area in the chart, and if this breaks down, then you have like a full retest, like every other stock has, right? Square went back to retest 2018 highs. Roku's come back. Every single stock outside of the big mega caps have come back to their COVID
Yeah.
highs, breakouts, whatever. So that's also where my thought process comes here in the Qs, that if we
Sure.
break down, we're going to come back to the COVID highs,
Yeah. I guess.
which from here is 100 points lower.
So that'd be pretty much like I'd be about a 50% correction off the highs then. So we're at about
It would be from 408 to 238.
Yeah. So even a 300 test would be a 20 would be a 20% correction.
We're
people
already
have
at
to be
so on the NASDAQ from the November 22nd week highs to the lows of February, it was 22.36 intraday move.
man.
Not closing. These are intraday moves, right? So highs to lows
Yeah.
on the NASDAQ composite. So we've already hit a 22% move down.
Oh, it's wild.
So I feel you, Nick, in the leg lower to bounce and get higher. Like in over the past 2 years, like that's worked almost every single time. That's what I was saying about dip buyers being rewarded, right? So maybe there's a massive buying opportunity when it if it takes another leg lower. But
that's the camp that I'm in. I'm in the camp that
I'm kind of with GP on this though, and you've been right over the last 6 weeks at least. So I got to give you props. I got to give you credit, but I think another leg lower is less optimistic for near-term upside
sure.
than trying to base here and finally come out of it.
Can I share my chart, the NASDAQ composite chart? Is that possible here?
I would love for you to share.
Yeah.
Okay. I cannot share while others are sharing.
Nick's got to stop sharing.
Got it.
Sharing and caring.
I'm trying to find the one I'm looking for. Here we go. Let's share this one. Do you see my NASDAQ composite chart here?
Yes.
Okay. So this is what I'm talking about in terms of air, right? So this was the COVID highs here. We legged down. We had a 32.6% move in 5 weeks, and then we snapped back just the same, right? And then we had a little bit of basing here, and then we broke out higher. But from here to here, this 1300, 13,000 level, it was essentially a straight up move, right? We didn't really base. We had a couple of tests. Oh, sorry, color is black, but let's change this to white here. Right, like we literally just channeled up. Right, so we didn't have. Oh, sorry, guys. Thinkorswim is still a piece of crap even on the weekends, but you literally just had a channel that went straight up into this level, and here you have 1 test, 2 tests, 3 tests, 4, 5, 6, 7, 8, 9, right? So my thought process is if we break this area, we're down here. There's not much saving this. Maybe we get saved by this area, but that's still 2,800 points down.
I mean,
maybe we base in this area here, right? Like if I draw a square out here, maybe we come back here, but this is where I think we head to, and it, right, like that's the only kind of basing area I see. This all seems air to me. Like it's just part of the uptrend. So if we break the base that's been established over the last year and a half, we see a move down, right? Like that's why I don't want it to break down. But like I said, if it breaks down, it breaks down, and we'll watch for levels along the way. If you're looking for levels for it to hold, I think MBG has talked about the 12,000 level, right? The top of this range
I'm
here,
scared.
right? And then you can hold this gap, and we can have any points in times of holding, and we have to see it. And you can obviously hold the like the 10-8, but that's kind of why I don't. We've had a lot of support kind of kick in these levels. That if this rounding kind of top happens yet again, it's going down here.
GP, hold me.
You guys wanted a bearish GP, right? So I can be the contrarian indicator.
Well, you know, we were the last two bulls standing, GP. So you know, we turn bearish, and you know,
We are not. There's some very respected people that I follow on Twitter. I'm sure you guys follow as well. They're pretty bullish in the camp, right? Like this is all happening, mind you. We haven't even started quantitative tightening. We're still easing, and we're still
the Fed's still
rates.
buying.
There's no rates. That means JPOW is still buying. This is all happening, and yes, it's forward looking. But what happens?
Hey guys, we got a special guest
just
joining us.
Hi, Rachel.
Rachel Fintwit is joining us.
If she ever connects.
Yeah, if she can ever connect audio. She spilled water everywhere, so maybe she's having some headphone or microphone problem. But Nick, I know this was something that you and I really wanted to talk about was, you know, just psychological reasons to be in, to be out, to buy, to sell. And lo and behold, we have, you know, a wonderful person in this field of study. Hi, Rachel.
Hi, Rachel.
You can unmute.
You're unmuted. You have to unmute.
Nick, I know that.
Yeah.
There you go. You probably need to mute the YouTube. We're having technical difficulties. It's okay.
That's all right. I'll continue talking about my bearish stance until Rachel can get her stuff sorted out. But, like, so Nick, you see what I'm talking about, or is that?
Oh yeah, totally.
In terms of like the base, like this is the NASDAQ composite, right? It's not the Qs. This is a better representation of all the technology stocks, and it was a straight channel up from the June breakout in 2020 to where it kind of is now forming to the end of 2020, and we've formed a base here. And if this base doesn't hold, I don't know any real base after that until we get back to kind of this level. And these are some other levels that we could potentially hold along the way. And it's not just straight destruction, but I don't like the look if we do break lower.
I think we got Rachel unmuted now, maybe.
No, nope, I still see a red.
She was momentarily. I swear to God, I saw.
It was. I just saw it for a split second, but water does things.
No,
There we go.
There it is.
I keep muting myself because I don't want to interrupt.
No, that's what we do here. We interrupt each other. It's more fun.
Especially me.
Yeah, and me.
Well, right, but you don't have to show your face, so no.
What do you mean? I've got a beautiful portrait of myself there. I'm a Swedish chef. Bort.
Okay, well, okay. No, keep going. You guys are doing great, and I don't do TA, so I'm just here to learn. And all I have to say is that it does comport with what I feel like psychologically. So my psychological chart is kind of, you know,
so your psychological chart is leaning bearish.
No, it's been bearish for a long time.
It's been bearish.
I mean, you know, psychologically, I think in a general sense, I agree. If we go down from here, like, I don't know who's buying, you know, it's risk off, it seems to me.
So you're not in the Nick camp of a leg higher or a leg lower to get higher.
No, I think
No.
I don't know that it has to, like, it could just go down. So it seems like it's just been going down. Like it could just keep doing that. I have no idea. Why is anyone asking me? Actually, this is live. There are people who want to learn here. Why? Why are you
No,
asking-
we're
I mean,
learning from
if-
you.
what do I know? I'm making this shit up. Who am I allowed
That's
to
all right.
believe?
We're all making it up. This is life.
Well, I mean, you guys at least
Fake
have
until you make it.
lines.
Ultimately.
You guys have nice lines to draw on.
If we
So-
hold here, it'd be really bullish as well, because again, like I drew my fibs from that 185, 190 ish area, the top of that range, GP.
Yeah.
And then I didn't draw them from the March lows. And even
Okay.
if we hold where you're talking, like we hold this, the 2 weeks ago low, that
Yeah.
is the 0.382. That would be that would be a very, very bullish hold. You're holding the top 30% of this run.
And look,
So-
so you'll see the lack of base even more so in the SPY chart that I'm just sharing here, right? Like that's a straight channel up. There's no base. Like
No.
this is it. Like this small base here that it's held, what it broke out here, 1 hold, 2 hold, 3, 4, 5, 6, 7, 8 holds. If it breaks this small base here, there's not much. There's literally not much for me, right? Like here's how it looks when you expand even more out, and you can see the lack of base even more here, right? When I have it pushed in, it's a lot more. When you don't have bases and you have just straight up moves, if things break, this is what it looks like.
Yeah. Yeah.
Right? It's just exponential, right? So if this momentum starts to go, when you have bases, you'll see that there's a lot more support. It's a lot more choppy. But when you have these kind of parabolic exponential moves, because that's, essentially what it is. It's
Wait, go back one thing where just right before there was the thing on the bottom. That's thing on the bottom, the middle indicator on the bottom underneath the chart.
this one.
Yeah.
This
Does
is the
that
MACD.
little thing matter with the little red part underneath?
Yeah.
Yeah, it matters in terms of it's not in a bullish camp, right? This is when the green crosses below the red, it's now trending to the downside, right? So momentum is shifted to the downside, and so you want to start to see this kind of green arrow. It's just I think it's 1226 moving averages. I can't remember what I have here, but when this starts to kind of curl up, it'll start showing better trends, right?
But it can go negative. It can keep going to the
It's
downside.
negative right now.
Well, look at the
Negative
last.
79.
Okay. All right.
If you look at the one right, look at the other time where it's really red, right in the middle here.
Yeah.
Like where the green across the line down there was kind of the bottom, not like, but where, I don't know.
Yeah, that's so. Rachel, I talk about in my charts when you see a MACD bullish cross, right? Like when you start to see this trend is when you start to see the market start to trend more. And but you started to see a curling right around here, so you got to see the shift that's happening. We're not seeing the curl yet, so we're still going to have some more chop.
But it
And
has
if
already
it
gone down
doesn't,
to the
if it
bottom.
doesn't curl, it goes worse. Sorry, go ahead.
By the time it started curling up, we didn't go lower from there.
No. Well, that big massive 323 reversal week was kind of where it stopped going down, right?
Right.
So like if we see a big leg up this week, I don't know, maybe the Fed says we're not going to raise rates, or Russia says enough, we're tired of this nonsense, and we have this massive move up this week, you could see it potentially stop in its track and start to curl up here.
Yeah, because I really see Russia saying I'm tired of this nonsense.
I mean, you know how I feel about narratives. We've talked about it many times over the last few years.
Well, yeah. No, well, what does the market want to do? And then we'll find something that fits it. So,
Yeah.
I mean, that's why I say it comports with my mood and sort of my general sense of things, which is just like, if we as like people, as market, don't like kind of come up from where we are right now, if like things continue to get worse, then it will get significantly worse is what I think for people. So it kind of feels like if that's the analysis for the market, it makes sense for me.
Yeah,
Hey, Nick,
absolutely.
you wanted to lead us in some psychology discussion, and having Rachel here, I think it's a perfect opportunity to do that. So I don't know if you had something that you wanted to dive directly into, but I think Rachel's hitting the nail on the head. It just feels like sentiment is waning, but we're nowhere near the bottom of where sentiment can go. I think there could be a full washout, and it doesn't feel to me that we're there yet. If we go to the downside.
Based on what
Yeah.
I was reading on Twitter, man, everyone's like, this is the end of the world, right? So
Yeah.
World War III is happening. This is crazy. Oil is going to $10,000 a barrel because that's what we do. We just go exponential, right? Everyone's got what's it called? Their thoughts become as exponential as these charts, right? Like everything's just going to go bananas. And like, so I'm sharing as we're talking, I pulled up the oil chart here too, right? This is a standard deviation move.
I
On the
see
left
SPY.
is, huh?
I see SPY.
Oh, okay.
You've got too many monitors, GP.
I know, I'm sorry. I have like 3 or 4 monitors. I'm going to start to share another screen.
Nick, are you still there?
I'm here.
Okay.
One of my big questions, Rachel, actually was about performance anxiety. Like, have you done, like, as far when it comes to traders,
Laugh.
and kind of comparing them to athletes, like traders, I'm talking about traders more so than investors, but a lot of us, we're depending on what the market is doing. Like, we could be putting on trades all day, every day. We could be in cash, like what we're going to go through drawdown periods, I guess is kind of where I'm going with this. Whether it's traders or investors, like I was looking on Twitter, I was looking at a guy, I don't know what he posted. I mean, everybody was applauding him because he was being so fucking transparent, but his account was down like 54% or something like that. And I was just thinking, like, God, I don't know how I would feel if my account was down 54% right now. Like, where would I, like, performance wise, like, how do you get yourself back in the batter box and want to start swinging again? It's kind of what I'm not asking necessarily for myself. I'm asking for the people out there, because I think that when dudes get blown, or not just dudes, but anybody gets blown out of the water, they're going to have a tough time. Once your bias shifts into a bearish bias, you have a tough time pulling out of that and switching. And you know what I'm saying?
Yeah, no, I think you get, you start to behave differently if you are having a different emotional experience about it. I think I think for traders and investors, I do think it's different. I think for, in some cases, like, I don't know that my whole portfolio has been down 50%, but my dumbass has held things down 50%, like,
Sure.
if I'm invested in. So I think, to share that as an investor would maybe feel different. If you can tolerate that, like, you can, how much can you tolerate? Well, depends on how much you need that money now, and how, a lot of factors, but as investors, I think you can tolerate a lot more. As traders, if that's like what you're doing, and depends again, like, I think most people when they get blown up, it's not blown up like 50%, it's the whole thing blown up, or not,
Yeah.
It's several times is my, just general understanding. And so you have to be able to survive, you have to be able to survive that. I don't know. I haven't polled everyone, but by any means, but I haven't met, I should say, the very serious traders that I've talked to, like, not everyone tells me, but most of them
They've all blown up,
like fully blown up, completely blown up.
Yeah.
3 times, like that seemed to be sort of the average. So then there's if you can stick through that, then that's like a, first of all, kind of personality trait, I guess, that you need if you're trading. But I think as far as being able to, kind of wake up the next morning and do the same thing. By do the same thing, I mean have the same process, not like repeat the same, thing till you drown, but like to be able to, in a shorter term way, not down like 50%, but down whatever percent, or had a bad week, or, again, most of the, seemingly successful traders I know have strategies for dealing with that in terms of, when they take a break, or, start to understand their patterns. But, I don't know if it's performance anxiety. And the other hand, like, the people continue to do what's working. And I don't short stocks because I'm just not that smart. I don't know how. I mean, like, I know how, sort of, but like, it's just, I'm gonna mess it up, I'm sure. I do mostly dumb, like, options trading and puts, and like probably doesn't work out most of the time, but I don't, but I think that when you have something that works for a long time on the way up, you keep doing that. And if you have something works on the way down, you keep doing that. So it's really about, where's the other side and where's the pushback. I think limits like are meant to be tested, and will be tested again and again, markets and people. But I think it's sort of like, if there's more people, I guess, for whom, if it continues to work for and it's working for, then they'll stick with it. As far as switching to, being bullish from bearish, if you're trading, I think seems to me like you need to have a pretty market neutral approach.
Sure.
I don't really know how, like, it seems hard to balance. Like, you could be long-term bearish, I mean, long-term bullish, I guess, like investment wise, but I don't know, for me, that seems a hard balance, I guess, if you're with full-time trading, if that's, if you want to trade a little bit like me and, not know what you're doing and be mostly bullish, like you trade what setups like work, and you're not like doing it necessarily all the time, although sometimes you are and losing a lot of money, but in general,
we get a gap down to start futures, so that's
we got a
on the
12% gap up in oil.
Wait, so GP, you were going to show us something about oil, though.
Yeah, so like, I'm already sharing the chart. Can you see it now?
Yes.
Yep.
So on the left is the weekly, on the right is the monthly. We are now hitting a 3 standard deviation move on this gap up on oil, right around the 130 mark. And this can continue to expand and continue to go up. We're already kind of clearing the weekly. This, to me, what we were talking before we started recording, this has now become fully momentum, not fundamental, like whatever it is. So like they can keep pushing this. We were talking about Tesla earlier, when it hit 900 at all-time highs back in October or September, whenever it was, of 2021. I would have expected any normal technical kind of situation, you would have just expected some consolidation when it comes back to retest prior all-time highs. Prior trap buyers are selling out because they're tired of holding a year and not going anywhere. You just see general weakness that comes in. It's normal, and it blew right through that and went straight to 1300. And we're kind of in the same place on oil. Like we have a gap up on the weekly. Like I can't even look at this gap up here. I don't know if there's anywhere in the chart we've seen a weekly gap up on oil, and we've had wars, we've had financial crisis, or a gap. You know what I mean? Like it's just like this is going back to 2011 now. If you're scrolling and looking, I don't see anything crazy as this gap up. So this to me is momentum driven, and I tried a small short last week on oil to fight the momentum because I'm an idiot, but
smoked out.
Yeah, well, I kept it short term and I kept it manageable in terms of my risk portfolio, and that's how I'm handling it. But these moves are just getting exacerbated these days. It's kind of nuts. Like if you're seeing like the options market, we've talked about this many times, the premiums that people are paying to get long on like 2-3 days out contracts. It's mind numbing.
So Rachel, back to the what you and Nick were talking about briefly. The market is forward looking, right? Like you're expecting whatever earnings or profits will be in the future when you're in the market or in individual names. And sentiment sort of seems to be like a pendulum, right? Like it's swinging from one extreme to the other, and it rarely sort of stalls out somewhere in the middle. And if you subscribe to Max Payne theory, like some of us do, the market is going to do what's going to cause the max pain to the most amount of people, right? So if sentiment is swung the farthest the one way, Max Payne kind of says we'll go in the opposite direction. Do you see that at all as, and as an advantage for a trader to try to read that sentiment or try to play the market to that degree?
The fear greed index is at 17 right now.
I mean, I think things can always go higher and go lower. Fear, greed, markets. Like I don't, and I think it's more about what would like save us in a way, like what would, because it's not like just from things going lower, and I'm talking about this in sort of general way, doesn't not make them turn around and go back high, go back up. Just, yes, there's like overshoots. And so then like you, I guess, have a bounce back, but it wouldn't seem to me like I don't think there's a bottom per se, until, like things can always go lower. I don't know if I'm answering your question though. And in terms of,
well, more of just the way sentiment shifts, right? And when bulls are just snorting, right, and going wild, it's euphoria. And then things sort of fall into a doldrums like we kind of are now, but we're still not max bearish. I think sentiment's bearish, but we're not fully max bearish,
I see what
right?
you're asking.
So the pendulum swung really high euphoric in November, and now we're probably past the midpoint, but we're not all the way bearish, right? So
yes,
in theory, you would see more bearishness before swinging back to more bullishness eventually.
I would think, yes, I would think to me, it would seem like if we don't stop here, right? Like if we don't save ourselves now, it's kind of like, yeah, I would guess that we would be at a point where, yes, you're testing, I think in that sense, you're testing limits, right? Of some sort or another, or how much pain people can bear, or whatever, people can bear. I don't know exactly.
So there's an infinite number of reasons, news or whatever, that we could go lower. And there are reasons, but probably fewer to all of a sudden stop us in our tracks now and push us higher and really get that sentiment shift. I mean, it would have to basically be, Russia's pulling out of Ukraine. They're turning on all the oil spigots, right? Like there's got to be a whole cascade of events to really
yes
change
and no.
that.
It doesn't really need to be anything. I feel like, Russia could pull out of Ukraine and the market could go down. Oil could go down and so can the rest of the market at the same time. And we're like, what's going on? It doesn't make sense. Like at the same, it could be, I think a very small headline, God knows what, but like that could turn things around at this, at the same time. And it's just like the news makes it bigger, you know what I mean? So I think I feel like the market in some kind of slightly, metaphysical or whatever way, kind of does what it wants to do. And we just put on the narrative part on top of it. So I don't think that it's like, it needs to be a huge headline. But I don't see a lot of, that said, I don't see a lot of, it's harder to think of even small things that we could glom onto in a positive way, which to me is less about like, oh, there's no reason for the market to go up, is more just like, that speaks to a general sentiment in a way beyond markets, that, is not going so well.
So our friend Wiggly Ick on Stock Twit said Max Pain will be when seniors are calling their congressman about lost money in their IRA.
I was about to say Max Pain will be when wealthy people who have financial advisors, when those financial advisors are like having to talk to them and to say like, you're going to survive, it's going to be okay. Like, I know we're off track by this much, or that kind of thing. I think
that's funny that you bring that up, because when we had Monkey Banana Genius on, what was it, 2 weeks ago now, not this past Friday but Friday before, he was saying he just talked to his advisor and he calls maybe once a year to chew him out. So maybe that's starting to happen.
Oh my God, he maybe, but he definitely seems like he would be the not easiest client to have.
No, I agree.
Shout out Monkey, we love you, Monkey.
That once a year though, that's not that bad. I think we're there yet? No, because I think that it's the discrepancy between individual stocks and indices, right? Like, people I don't really know, because I'm not expert to talk on this, but my guess is that no one, at this point, who has, reasonable kind of advisors, and they're diversified and this and that, and like, no one's looking at their portfolios in the last year, let's say, or 2 years. I mean, they have a little bit longer memory maybe than a year, but like, they're up, like, so it's because they have a lot of index holdings, they have still bonds, they have, like, they're not all in tech stocks. So I think, it has to hurt in other places for that to happen. I mean, hurt worse in other places for that to happen, really. And I don't know that we will go there. That's not like, I don't believe that like, just because there is a Max Pain place, we have to go there every time. It's just that I think I do sort of feel like if we continue lower, we will continue lower. I don't know. It could be drastic and quick, and it could also be like more of this, and then just we're ending up lower, because I don't have my ear to the street or anything like that, but like FinTwit people, there might be some panic, but like, I don't think we're at panic in, any larger class of investors or
the selling is over when sellers are exhausted.
Yeah, and sellers are not going to get exhausted when you can short everything to like beyond the shares that are existing, and like, if that's the mood and if that's what's going on, I don't know. I don't see like actual sellers, big sellers, like, I don't know. Who knows? It's hard to know what all the market forces are, but I don't know that the sellers get exhausted when buyers fight back, That's what exhausts sellers. That's just like what exhausts buyers, is like, you get exhausted if you keep trying and you're getting, pushed out or whatever. Then okay,
I'm Team Bear Gang with Rachel. I'm Team Bear Gang now.
No, I'm not.
GP, it's just you. You're the last bull stand.
That's fine, dude. So like, if
no, I'm not saying you're going.
if what I don't want the market to break here, because it's going to be Max Pain for our parents. It's going to be Max Pain for our the people that we care about, right? Like, because they're closer to their retirement age. Yeah. I don't want the market to go 70-80% lower here, because most of them haven't cashed out. They haven't gone to cash. they're still in whatever fixed income or whatever they're in. But when the market sells, it sells everything. It's not like you know what, I'm not going to sell oil, I'm not going to sell gold, right? You still have lots of bullish stuff here. So I want to be as bullish. If I said it in a post a couple weeks ago, I'll be whatever you need me to be, right? Like, because this is like, if this is that 50-60% move down and 13 years of sideways, you're seeing another entire generation of our parents who've worked their butts off going to be saddled with still some wealth, but a lot lower than whatever they. So I don't want it to break, but if it does, it does, right? Well, you'll have to be active, and it sucks, and it's what it is. But I'm happy to be a bull. I'm happy to be a bear.
Yeah,
I'm
no,
happy to be whatever.
it's really, I think it's a time where and it's true, even for, I mean, I guess, I don't know, we're all different ages. I'm 41.
We're all the same age, right?
But well, okay, maybe we are, but typically, I mean, I was talking to someone today, saying something about someone else on Twitter. They're like all babies, like 26. I was like, oh my God, not Twitter. I'm sorry, not someone on Twitter, someone who happens to be on Twitter also runs like a $600 million company. I'm like, he's 26. What's going on? Anyway, I think the people, my age and who have kids, like, if right now is not a time, if you are not like, if you don't have a lot of extra money, like, it wouldn't be a time to have a lot of risk in the market. I mean, I sort of do, but I don't, in the sense that, like, what I have in the market right now is so much less than what I have in my apartment. And in that sense, on the other hand, I'm not in all cash by any means, and I'm not the person you should listen to once again. But I think that, yes, I think that the point, I think everyone has that, whatever, January 24th, is that it, like, target in their minds. And like, is it possible we go a little bit lower and they'll sort of drop to bounce back or something? Yes, I think so, just because of weird ways that algos and charts go, that, like, whatever. But I think by and large, if everyone has that on their mind and that's like the place, and we go below that, I think, it doesn't seem like, from your
suboptimal.
Show me the charts, and you guys are showing me the charts. I agree. It doesn't look like there's much to catch us, right?
To me, there isn't, right? Like, it's just when you're looking at some of these exponential moves, there's no base, there's no, the one I'll give you as an example is DocuSign, right? DocuSign is probably one of the best. Is it went straight from 60. Can you see the DocuSign chart, or am I showing something else?
Yeah.
So, like, it went straight from 66 to 312. When it broke, there's nothing stopping it, right? There's no
charts
support.
look like that. Look at PayPal.
Yeah, PayPal, similar.
Roku.
Right? Roku, same, right? There's no base. And what are they doing? As soon as it found a base, it's holding. So this is why when you look at the Qs, it breaks. That's the base right here between 164 and 195.
Yeah, I know. I have to say, I tend to think it's, I mean, again, I'm optimistic. So, and this is based on nothing. I think it's going to hold, because partially I want it to hold, and partially because, I think like, to your point about when do sellers get exhausted, it's also like, again, who pushes back. So there's enough, no one wants that to happen, right? Like, there's like no one in our, like, minus a few maybe hedge funds or short seller, whatever, is like, no one wants that to happen. So if there's enough people not wanting that to happen, that will be the pushback, I guess. So I think it will hold. That's why I'm not in all cash. Not that, again, it's gonna freaking make a difference, because whatever, it's another story. But I think that, that's where it, like, sort of comes down to and I don't really see, like, necessarily those players, like, jumping out. They've obviously jumped out of their tech stocks, but, like, I don't know. I guess it's an interesting point. We'll see. It seems like, oh, look at Square. Wow.
So yeah, but so what you also notice is a
Look at
nice
that volume.
big green monthly candle that close at the top of the range, right? Like that's, you could argue that it's a bearish candle as well. Everyone just loves to argue, so it can happen. But it tested the base. It's holding.
But
It's
it has,
fundamentally a better company now
doesn't
than
it
it was.
have to test that? Like, so the last month low, like, doesn't it kind of have to test that? Won't short sellers not be happy until it tests that and holds that now that it has that?
So the way I'm looking at it, I have a lot more lines here, but that's on my daily views, is that this was the breakout here. This
Ah.
was the test of the breakout.
Okay.
Tried to break lower, right? Failed to break lower, closed above this close here. So there's a couple of bearish kind of monthly views here for me. And right now, 3 days into the month or 5 days into the month, whatever it is, we're currently not confirming. So if we break this lower, this goes back down to here, right? Like back down to 33.
Yeah,
It
yeah,
breaks.
no, if we break it, but don't we have to kind of test it?
No, so that's what I'm saying. This was the low. This was the retest.
Oh, so
So
we
here
don't
I
have
want to
to.
see confirmation to break higher, right?
Yeah,
Not
it either
necessarily.
needs to base, right, or it needs to pick its direction.
What does
Yeah.
it look like on the week?
We can pull that up.
Hey, GP, after you get this one, we got one request on Bitcoin.
Okay.
Bitcoin's
Yeah,
taking a
I'll
shit,
stop
but
sharing. But so like Rachel, just real quick, right? Like that's not a great reversal candle because the volume picked up, right? So you just got to see where it goes on. It's about a 50% retrace of the move of the
Right.
of the kind of bullish engulfing here if you're looking at. So you want to see hopefully not another leg down, but kind of a maybe a sideways cancel, inside, up, whatever. So
Right.
that's what we're going to be looking at. But this is the base I'm talking about, right? It tested the base multiple times, tried to break below, went higher. So you could be right on a weekly that it's going to come back here.
Well, yeah, no, I mean, the reason I ask is because like it's the timing of this particular month with their earnings, like,
Yeah.
you know, what it was doing in the month prior, like before earnings. So then I guess it's just like, how much does the market care about earnings and potentially maybe not.
It did, right? That put it in one of the biggest kind of like weekly volumes. Yeah, if we're going
Yeah,
down.
but then look at the next, the volume.
Right, but look at if you're looking now on the daily, look at the volume that's come in versus what the selling is, right? So you got to start at the highest time frames and then work your way down to see how it looks.
But there, won't it have to go to the gap? See, there's what I'm like, doesn't like.
It's in the gap already. So now let's see. I think Bill is one of them, right? Went into the gap here and then reversed higher. So we'll see how strong those earnings really are. Because it closed in the gap. Will it reverse higher? Will it continue to go lower and refill that gap?
In general, if it goes below the gap, is that very bad?
Yes, it has no strength.
well, if you're short, it's not bad.
It's bad for bulls.
Right, but like once it gets below the gap, it's not like, okay, it's filled and now it goes back up. It just keeps going.
Yeah. So look, here's Google, right? Gap off of earnings because they decided to split 6 months down the line, idiots, but a whole different conversation. Came back to fill the gap, had a small bounce because people are like, oh, it's going to hold. And then sellers came back in control and went all the way back down here. So it's really dependent on how the price action looks. But
and it looks like they want to try a third time down there.
They definitely looks like they want to try a third time, doesn't it?
If it tries a third time, it's not holding. That's my personal opinion. Because it's not the third try if you're going across the board. If you're going across the board, it's now tested this level quite a few times.
Yep.
Right here, here. So if this breaks down and this comes down, it goes potentially down to here and could continue to lower depending on how the market goes. But
yeah, that's a chart. I that seems like a good sort of representation of things.
Yeah, well, it's just
because then you see that gap. What's that gap? It's gonna go. You know what it's gonna do? What's the gap over here? Down there. One? Yep, it's gonna go down to there. There's a gap. I see it.
It's so you can now in July of 2022, you'll be able to buy Google at the same price it was in 2004 when it IPO'd.
July in 2022.
That's when they were splitting 20 to 1, right? So if it goes down to
Oh,
2,000 by
not
the
the
time
same
they
price.
split,
I mean, the same price, but not like, yeah,
not
but
the
you're
same
right.
value.
But you're
Same
right.
price.
Like that
Yeah.
seems about right. Okay, so I'll plan on that. Even though that's like one of my biggest holdings. So
I'll stop sharing here because I know Bags wants to
yeah,
share
I'm
the
sorry.
Bitcoin chart.
Bands in the chat wanted to see Bitcoin, so
Okay.
I'll share my chart. But he was interested in your take on Bitcoin. I mean, we hear me wax poetic about Bitcoin in my Bitcoin segment every single week. So, anyway,
My view or Rachel's view?
No, not mine.
he says, GP, what is your take on Bitcoin?
Okay. Why am I having an access denied?
Oh, I turned my screen on. Do you have one?
No,
that
no,
you
no,
want to show?
on TradingView,
Oh,
not
well,
you.
it happens to be really crashing in the last like 10, 15 minutes. So
Well, it's still up 1.5% for the week, which is crazy considering the week. But for me, and I'll say this until I'm blue in the face, Bitcoin's not bullish until it's over the weekly 21 EMA. Just go back and look at history of Bitcoin, and it has never had any type of momentum until it gets over that line. And we failed it there this week. So, just in my view, we still have some potential faffing around in this wedge if it wants to do that. Below 4,500 is sort of the pivot, or that 4,500 is the pivot in my opinion. But GP, you can share your screen, or you
I
want me to
can't.
keep this?
TradingView is
Okay.
being inherently annoying.
All right, you just tell me what you want to do or what you think about it, and I think we got bands covered.
Yeah. I think we've talked about this, right? It's literally done nothing in 3 weeks.
Yep.
Like if you're looking at a daily here, I think I can actually share it from Thinkorswim. So let me see if I can
Go for it.
Yep. Is that the Bitcoin chart? Is that what you see?
When markets correct Bitcoin to 10K, I'm not getting that bearish.
Do you
yet,
see
man.
this? Do you see
Yep,
the
I can
Bitcoin
see it.
chart?
Yep.
Right. So like we've been talking it feels like every Sunday we talk about it here. It does this during the week, and then we come back here on Sunday and talk about it.
Yep.
Sunday we talk about it. It does this. It's what's great about this chart is it's establishing a base across the board, right? So if you're looking at this from an overall kind of perspective, you have a base that's forming here, right? So if you're in this range, and it's a large range because it's crypto ultimately, from 30,000 to like 46,000 or
28,
so.
but who's counting?
Yeah, we talked about the levels previously, right? Like I don't remember the exact numbers.
What's a couple grand between friends?
Yeah, well, if it's going to 50 million, who cares if it's down 2 grand?
Exactly.
Right? So it doesn't matter. But so like what I like about this chart is that it's forming a base here, right? Like you'll see people come in and they're ready to support it. This is the first breakout here in 2021 or at the end of 2020 that we talked about. It's come down, retraced a little bit, retest the breakout, and then broke higher, came back. We're retesting here, and ultimately what you can say is we're basing every time we come back to retest is we're basing a little bit higher. So it's signs of positive, right? Like this base is here, this base is a little bit higher, this is approximates, right? So these bases are these bases are forming slightly higher each time, right? Like you'll wick down a little bit here into the proper base, and you're forming a bit higher, and you're making kind of higher highs. So it could potentially do this for the next 13 years, right? I don't know, but it's not a bearish chart or a bullish chart. It's just sideways to me, right?
Chop.
I'll pull up Microsoft. For those who don't know Microsoft outside of the last 7 years,
me.
Right? This is Microsoft from 2000 to 2014, 15. literally went sideways for
I mean, that-
16 years. So Bitcoin could do that too as it's starting to mature and stuff like that. So it's up to you how you want to how you want to invest it.
Hey, Nick, Rachel wants to know about gold.
Gold.
It's working.
Yeah, it's working.
Gold.
Let's see. You want to pull up the GLD or do you want to pull up the GC?
I'll do whatever one you want, Nick.
I mean, the GLD is fine.
I'll go to a white screen. So
I'll-
weekly, monthly, what would you like to look at?
Doesn't matter, daily or weekly.
Here's the weekly.
I mean, the weekly, yeah, the weekly looks good. I'll likely start selling into those highs, and then I'll look to add over if it breaks out into all-time highs. It's kind of where I'm at with it right now, but yeah, it's still working. The only thing that I sold last week, bags, is that PVG, and it was just because I left on Friday to go skiing with my wife up north, and I had such a big position that I just was like, fuck, I have so much gold and miners that PVG was the one that I dumped, but miners are continue to work as well. FNV is the only one that FNV is pretty much right there at highs. I wouldn't be surprised to see a little bit of a pull in here though, as well, especially as like
Yeah,
FNV.
that's what I just pulled up, Nick.
Yeah.
So this is like, so the gray area is the standard deviation from the 50-day.
Oh,
and
sure.
the red area is the 3 standard deviation from the 20-day, right? So like if you're looking at this is on a weekly time frame, it's quite extended. It can continue to extend, don't get me wrong. Let's see how it looks on the monthly. Monthly has room, right? Monthly has room to the 192 area if it really wants to extend up to the 216, 217.
Yeah,
area.
I think
I'll remove this because that looks ugly, but yeah, that looks so much cleaner on a monthly.
yeah, it's just going to be a trim and trail kind of situation for me.
Yep,
Yeah.
and this
Does
is the
break
great
out the
part right here.
highs, I will on the monthly. Yeah, the monthly MACD just crossed.
Yeah,
So
because if that crosses like it crosses with some oomph, this is 3,000 an ounce.
yeah.
Wow.
So I have NEM, I have Ego, I have
You want to pull those up?
sure.
NEM weekly.
Gold was the one that Barrick Gold was the one that just
GOLD.
broke out
Yep.
on Thursday, Friday. The daily looked just beautiful to me. As soon as it took out that puke bar that we were talking about last week,
Yeah.
as soon as it took out that high, it got going. On the weekly,
What
it's
are
kind
those
of
puke
pushing.
bars? Have you seen those before, Nick?
Yeah, so I was I don't remember who I was talking to last year, but I don't know if it was last year or the year before, but I was like, oh my God, I don't have my own patent and like trade signal, but I love seeing I think that they're, in my opinion, they're just shakeouts, especially after kind of like in Barrick, we had it break out over 20 and then it ripped from 20 to 23. And so it had it's a pretty decent sized move for a $20 stock. And then all of a sudden we saw that kind of, that puke off the high. It didn't push that following day. When I see a big wide range bar like that, I want to see follow through to confirm that. And the fact that we didn't get it, we actually took out the low the following day and then it just continued higher. I was like, man, I think this thing is it's the last of the miners that I entered. So I don't actually have that great of a price in it.
Do you feel like this is a warning signal at some point? Because we had one of these similar, like it's not gold, but booking.com had a similar kind of bar. I'm just going to pull it up real quick. So I'm asking because everyone's different, right? Like you had this.
Oh, right.
this
yeah.
massive kind of like puke bar here, right?
Yep.
It didn't confirm the next day, went out and tried to create new highs, and then just got rocked.
Yeah, your
And-
big signal there on both sides was actually that when it took out the high, and then the next day it immediately reversed lower. You're like, okay, if that breakout failed.
Yeah. So like there was two. That's why I was what I was asking is how like you're saying it was just a shakeout, right? In this case, how do you know? Well, you don't until you see the next signal ultimately. But do you have any clues to kind of know that the breakout is going to be something that's more likely to happen this time around versus like this booking.com? I'll go back to the gold chart.
Unless you're going to layer it with the indexes, you know, if the overall market trend is up, then I'm going to assume that when that high of like that puke bar gets taken out, it's going to continue. If the overall market trend is down, I wouldn't necessarily be in that camp, but I also wouldn't be buying breakouts if the general indexes are trending down. So, but
In this case, it's a bit different because it's a commodity, precious metal.
Exactly.
Okay.
If that would be my risk, if that was my entry, my initial entry, I just use that bar as my risk. So like,
yeah, it's a small. You can buy the breakout, but your tighter stops here.
For sure.
Makes sense. Because it's those.
We
those
went
bars
for
that
90 minutes today, an hour and a half, full of all kinds of everything.
Yeah, it was a good one. Thanks, Bags, for hosting this.